Welcome to Stock World, where we break down the latest financial news, market insights, and stock analysis to keep you ahead in the world of investing. Let's analyze the recent data, expert opinions, insider activity, and technical indicators to uncover what's really happening with UnitedHealth Group and where it might be headed next. To start off, let's rewind to April 17, 2025. Since that date, UnitedHealth Group, often identified by its ticker symbol UNH, has been marked as a sell candidate by technical systems, scoring a minus 2.85 on the predictive models. What does this mean? Essentially, several trading signals pointed toward an expected drop in the stock price. And true to that signal, the stock has not performed well. In fact, it has declined by approximately 30.44% since then. That's an average loss of about 1.38% per day, a concerning trend for short-term investors and swing traders. From a technical standpoint, the stock has been tracking a wide and sharply downward trend. While some analysts believe such a position might indicate a potential buying opportunity at the bottom of the trend, there's a caveat: if the price falls below the current support level of around $269.72, it could open the floodgates for a steeper decline. Let's examine the potential scenarios both for the near future and the longer term. Over the next 3 months, trend modeling forecasts suggest a possible decline of around 20.68%. However, due to high volatility, the range of potential movement is quite wide, anywhere between a loss of 32.28% and a gain of 35.98%. When we zoom out and look at the one-year forecast, the picture doesn't become any clearer. Projections estimate that the stock could drop another 13.06% over the next 12 months. But because of the stock's erratic behavior, there's a potential for it to fall as much as 24.68% or rise as high as 62.55%. This creates a wide possible trading range between $237.91 and $513.47 per share. So what does this mean for you as an investor? It suggests there's significant uncertainty ahead, with both upside potential and downside risk remaining high. Let's turn our attention to a more recent development. On Monday, the most recent trading day, UnitedHealth stock experienced a dramatic jump in its share price. The price surged from $291.91 to $315.89, a robust gain of 8.21% in a single session. That kind of movement is certainly eye-catching, especially in a stock that's been struggling. In that session, the stock saw an intraday fluctuation between $297.25 and $316.29, representing a total swing of about 6.41%. However, it's important to note the bigger picture. This increase comes after a stretch where the stock dropped on 8 out of the last 10 trading days, falling a total of 21.97% during that period. Adding another twist to the tale, trading volume actually dropped on that strong up day. Only 60 million shares were traded, a decrease of about 9 million compared to prior sessions. In monetary terms, that's still a massive $18.8 billion in trade volume, but the declining volume during a price increase can be a red flag. It may indicate a lack of conviction among traders and can sometimes signal that a reversal or correction might be around the corner. Let's explore how far this stock has fallen. Over the past year, the highest price for UnitedHealth Group stock reached an all-time high of $630.73. Compare that to the lowest point over the same period, $248.88. At its current level, the stock is sitting at about $314.84, which is roughly 49.92% below its 52-week high. That's a significant drop, and it highlights just how much value the stock has lost over the year. So, what's behind that sudden 8% spike we mentioned earlier? The biggest factor appears to be a major insider purchase. The company's new CEO recently bought $25 million worth of UnitedHealth shares. Insider buying on that scale often boosts investor confidence after all. If the leadership believes in the company's future, it can be seen as a strong vote of confidence. But investors should not get carried away by just one day of gains. Despite the positive move, the company continues to face multiple legal battles, including a class action lawsuit related to securities fraud. Leadership changes also bring uncertainty, and many analysts remain cautious. On a broader market level, biotech and healthcare stocks have been doing relatively well. UnitedHealth is benefiting somewhat from this trend. Even so, it's important to remember that this stock has dropped more than 40% year to date, which casts a shadow over its short-term outlook. For bargain hunters, this kind of massive drop might seem like an attractive entry point. But remember, cheap doesn't always mean good value. With ongoing litigation and reputation risks, many institutional investors are still hesitant. When we dig into analyst ratings from various firms, the outlook remains mixed. Morgan Stanley gave the stock an overweight rating, suggesting confidence, but with a hold action attached. Raymond James downgraded the stock to a market perform level, also indicating neutrality. RBC Capital issued an outperform rating but simultaneously advised holding the position. HSBC offered a hold rating and downgraded the stock on April 22nd. Cohen and Company labeled it a buy, yet added a cautious hold tag. On average, the sentiment across the board is best summarized as neutral. From a valuation perspective, things are even more complicated. The price-to-earnings PE ratio suggests the stock is overvalued, while the price-to-book ratio signals a strong sell. However, return on investment ROI metrics show promise, leading analysts to place a strong buy in this specific category. Now let's explore some of the technical indicators that traders are watching closely. A buy signal emerged from a pivot bottom pattern on May 15th, and since then, the stock has risen by over 15.14%. There's also a buy signal from the 3-month moving average convergence divergence MACD analysis. However, there are concerning signs too. The price increased recently, but trading volume dropped a classic divergence that can sometimes precede price corrections. Short-term and long-term moving averages are flashing sell signals. The long-term average remains above the short-term, another bearish indicator. If the stock does rally, there's significant resistance waiting at $322.99 and further up at $448.49. Breaking past either of those would trigger buy signals. Other technical tools like Bollinger Bands and pivot points have recently issued mixed signals. Bollinger indicated a buy signal 26 days ago, while short-term moving averages showed a sell signal 23 days ago. These conflicting signals underscore the market's uncertainty. From a support and risk perspective, UnitedHealth stock has some cushioning at the $311.38 level. If the price dips down to this range again, traders might see a bounce opportunity. However, the stock is classified as highly volatile. For example, just in the past 24 hours, the price moved more than $1.19 from high to low. That's over 6% in a single day. The average daily volatility over the past week has hovered around 8.55%. This wide range of fluctuation indicates that the stock is considered high risk and not ideal for conservative investors. Let's talk about valuation metrics. The price-to-earnings ratio, or PE ratio, compares the company's stock price to its earnings. A lower PE ratio might suggest the stock is undervalued or that earnings growth is stalling. It's a metric worth watching, especially with the next earnings report coming up. Mark your calendar. UnitedHealth is expected to report its second quarter earnings on July 15, 2025. The consensus estimate from analysts is $5.61 in earnings per share. These numbers could have a significant impact on short-term stock movement. If you're thinking about day trading or swing trading this stock, here are some levels to consider. First resistance is at $378.75. If the stock breaks above this, it could be a bullish sign. Support stands firm at $311.38. If this level holds, there could be a temporary bounce. Let's wrap up with a breakdown of recent insider transactions. On May 16th, Rex John F. bought 17,175 shares of common stock. Stephen J. Hemsley made several big moves, buying 86,700 shares and exercising over 600K stock options on May 14th. Timothy Patrick Flynn acquired 1,533 shares on May 15th. Kristen Gill added 3,700 shares to her portfolio recently. Overall, insiders acquired more than 1 million shares and sold just over 70K in the past 100 trades. That gives us an insider activity power ratio of 88.081, strongly positive. So, after evaluating all the data, what's the takeaway? Despite some recent positive developments like insider buying and a strong trading day, UnitedHealth Group still shows several negative signals. The stock remains stuck in a downward trend, and risks, both legal and financial, continue to cloud its outlook. At this time, our valuation remains bearish. We expect the stock to open lower on the next trading day, possibly around $309.81, a projected drop of over $6.08 from the last close. Investors should proceed with caution. Remember, the stock market always carries risks, and no forecast is guaranteed. Make sure to consult with a qualified financial advisor before making any investment decisions. Thanks for watching my YouTube channel. If you found this analysis helpful, don't forget to like, share, and subscribe for more in-depth market updates. Stay tuned for our next video.